Felix here, and welcome to this Monday morning. And I'm speaking in a soft voice because I appreciate some of your emotions and nerves are a little tried and tested today. Markets are down yet again. I'm not going to sugarcoat it. Instead, what I want to do is help you understand it, help you understand the risk, but also the opportunities, because there are opportunities, there always are. Give you an idea of how low this can go. We're joined by Winston purely for his therapeutic effects. So if you need a bit of therapy, we'll do some Q&A. I'll share my screen with you and I'll run you through everything that I want to share with you and teach you here today. And my attention is always, when I used to work at a bank, we had a 6, 7 a.m. morning meeting. Hated the bloody things because he wants to get up at 6 in the morning. It's dark. It's just against human nature, I think, to get up in the dark. And somebody who was wiser and more experienced would walk us through everything that happened. And it would set us up for a really great day. It allowed us to make better decisions. It meant we were not caught out by what was going on out there because we'd already had it explained to us. So that's really my goal. It's like make you the best informed investor out there, teach you some rules and some systems and some safety along the way. So what we're going to run through here is this. Is this the largest crash ever? And Winston can join us for this bit. There is a rumor of an emergency Fed meeting. I see it all over Twitter. I want to explain that to you, what that's all about. Are we actually going to get a rate cut? Is the Fed going to bail us out this time? And why is Wall Street now suddenly expecting a recession? And what happens if today is as ugly as Thursday and Friday was, right? What actually comes next? Because I think that's really what you're wondering about. And I'll tell you what I'm buying today. And I'll give you a warning. And I don't think you quite know what that is, but I'll explain that to you because that's really quite important. We're going to do a chart review once the market is open here in 28 minutes on the usual popular stocks, Palantir, Sofa, Nvidia, Tesla, Archer, and all your favorite tickers. Just shout them out there when we get to that. And then we'll do a big Q&A just to get everybody's nerves down a little bit, get everybody better informed. Make sure you leave us here today in about half an hour or so with a smile on your face. That's really the goal, right? Winston's job obviously is mostly that part. He's very, very good at that. So does that sound like something that will be of high value to you? Then write value in the chat. And that way I know this is something that you guys value. And let me walk you through it. Someone's saying depression. Seriously, it's seriously from Wall Street. I'll show you the resources. I'm not making this up. I'm not trying to create fear here. Quite the opposite. So the question is this the largest crash ever? Some of the headlines are saying that. Well, Hong Kong stocks. I'm in Hong Kong right now. Are down 13.7%. So Chinese stocks. That's the worst day since 1989. Pretty long time, right? Some people are also saying the worst day since 1997. Yeah, both. I think both. So. Lots of value there, brilliant. Valve, that'll also do. Good morning, Winston. He's here, he's happy, he's snoozing. We just played very nicely in the park, and then I said, come on, let's go inside. And he snatched the ball and ran away. Okay, so today could be the third straight day where the S&P falls more than 4% in a row. That has only ever happened one other time. It was during the Great Depression, kicked off in 1929. I'm not trying to create fear. I'm just putting it into some perspective here, right? Let me show you the futures this morning. The S&P is down 2%. The Nasdaq down 2%. That's an improvement, by the way. We were in that 4% territory a couple of hours back. The Russell's down 2.5%. Japanese, European stocks, German stocks. The German stocks are down 4.7%. The fear index is up over 4%. Pretty much everything is down. Unless you're, heavily invested in soybean meal, which I think is probably not that many of you. So is that likely? It's possible. It's possible, and we walk through it. And what happened after the Great Depression? Well, let me show you that as well. But let me show you one other data point first. This is from Goldman Sachs. They're saying the amount of short selling in just their products, essentially, was the largest on our record. So this is where we are with selling. This is the most selling they've seen. Well, their data starts in 2015. So, it's not that long a period. It's 10 years. So we're seeing very, very, very serious selling, likely because of margin calls, I think. Now, after the, well, actually, I didn't screenshot that. But okay, I can tell you after the Great Depression, after that dropped like that, it did actually go up fairly rapidly. So it wasn't like, it was over forever. It's just the people who got margin called, and there was a lot of people obviously lost everything because they had margin. We'll touch upon that in a moment as well. Now, I want to explain this. This is actually really important. There is a rumor that there is an emergency Fed meeting being held, a closed board meeting, say the Muppets who run that particular X account. The Fed holds closed board meetings pretty much every week, completely standard, nothing unusual about it. And no, this is not an emergency Fed meeting. This is just a regular Fed meeting that happens behind closed doors, which they do all the freaking time, basically every week. They publish them. You can look on their website. So be careful these days who you're taking information from, because people put this stuff out, they don't know what they're talking about, or they just want to create some more clicks or whatever it is. So look to the substance and yeah, as I say, be a little careful who you're listening to. I'm not saying they're putting this out maliciously. Probably the guy who runs that Twitter account is a 16-year-old somewhere and doesn't know what the heck he's talking about. But it's a little it could cause some confusion to people. But are we actually going to get a rate cut? Well, yeah. So we were expecting like 2 or 3 rate cuts. Now the market is expecting 5 cuts in 2025. What does that mean? Well, every single rate cut, so 1 cut, should increase stock prices, especially in the more sort of growthy tech sort of side of life, where I know many of you invested, by about 2.5% on stocks, right? So you get 5, you do the maths, you should in theory get a nice 12.5% bounce in stock prices. Now, it's not like a completely linear thing, but it's generally the way the gist is. So that's a good thing, right? So why the heck are markets not rallying then, right? Well, it's for the following reasons. And I don't use the R word lightly, but Goldman Sachs do. The smartest bankers out there, according to Goldman Sachs. And they're saying that the countdown, according to the countdown to recession, this is their note from, this was from yesterday. Yeah, their Sunday note. And they're saying we're lowering our GDP growth forecast to 0.5%. We're raising our recession probability to 45%. Sharp tightening of financial conditions. The US tariff hike will add, basically that. So if most of the April 9th tariffs do take effect, then the effective tariff rate will rise by 20 percentage points. Once those increases are likely sectoral, blah, 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 blah. So basically what they're saying is on the 9th, right, which is Wednesday. So just be really clear about this. The Wednesday the 9th is when the main tariffs kick in. So we've had the 10% kick in automatically when it was announced last week. On the 9th, all the other stuff kicks in. So if you're a country and you get like a 50% tariff rate, you get an extra 40% on the 9th. There are a lot of people who are high on the hopium that Trump is bluffing and he's going to delay that, or he's going to negotiate between now and the 9th. Now, explain to me how you can come to an agreement with like 50 countries in the space of 2 days. I think that's pretty hard, right? Because those other countries are not run by Trump. If it was Trump versus Trump, he'd probably come to an agreement, right? And he'd say it would be the most beautiful agreement that anybody's ever reached. But you're negotiating with the European Union, which in itself is like 27 countries. You can't, agree on what day of the week to meet or what font to use for the document. So that's what you're dealing with. So this is going to take a while. Most trade deals take 10 years. Yeah. So what are you going to achieve in 2 days? I think not a lot. So my opinion, and you can disagree with me, obviously, on this. And this whole thing, is he pro against Trump thing? Yeah, I love that I'm getting literally same video out yesterday. And half the people were saying, you're pro-Trump, I hate you. And the other half were saying, you don't understand Trump, Trump's right, you're an idiot. And I'm like, brilliant. People think I'm both, for and against. Neither, really. don't get to vote in the US. I'm not a US citizen. I'm a teeny tiny US taxpayer in sort of the scale of things. So not really my business. I just have to take the facts that I see. Now, I have read The Art of the Deal, not recently, but fairly long time ago. And the man negotiates, well, he bluffs, he bullies, he's very effective at that. He gets very good outcomes when he negotiates for himself. So I don't think he's going to take this off the table, because this is his negotiating tactic. He wants those countries to feel the pain so they come to the table. If he just says, oh yeah, let's just push it back a month, I don't think that's going to happen. That would be my opinion, right? I think it's going to happen. It might happen. If it happens, we get a little bounce and take advantage of that bounce to de-risk. That's what I would say. Take some stuff off the cooker, because it won't be over, because people won't come to the table quickly enough and they won't agree on what he actually wants. Because once you understand what this is really about, this is not about, people thought, and I thought, this was about equal tariffs. So say you are, say you're Vietnam, right? Lovely country, amazing, beautiful people. And at the moment, allegedly you have a 40% tariff on the US. So the US comes in, puts also a 40% tariff on you, or whatever it is. And everybody is like, okay, well, why doesn't Vietnam go to 0? And then the US goes to 0, and then trade continues as before, actually maybe better. But what does Vietnam make and sell to the US? Well, garments and white goods and, that kind of thing. They've taken on quite a lot of the sort of industrial base, manufacturing base that used to be in China, and they've moved it to Vietnam. And what does the US sell to Vietnam? Probably not a lot, right? So Trump does not want them to have zero tariffs. He wants to get rid of the trade surplus. So he wants Vietnam to buy the equivalent value of goods that the US consumer is buying from Vietnam. Now, you guys buy a lot of Nike trainers and a lot of, polo shirts and that sort of thing. Vietnam doesn't. It's not that wealthy a country that they can buy all that stuff from you guys. So it isn't really going to happen. And therefore, likely, the tariffs will stay in place. At least if you follow that logic, right? You're seeing, and then they're the penguins also. Yes, of course, the penguins. Have you seen that? They're penguins. There's some great memes on that. We'll talk about that in a moment. So, all right. So what if today is really ugly, right? What if we get that third minus 4%? And at the moment it looks a little bit better, but who knows? Literally November 1929, September 1932 is the last time we had that, and then July 1933. That happened. What happened, like, say 3 weeks later? You were up 10 to 27%. Might have been a good time to get out on the bounce. And that's literally what I was talking about this morning with one of my mentors, is exactly that. Like we're going to want to de-risk on the way up, because there'll be some faux bounces before the whole thing is over. At least that's my view on that. But it also gives you some hope, right? Nothing goes down in a straight line. You get plenty of warnings. You watch me, I'll highlight the warnings to you. So what am I buying? Okay, first of all, if you want to buy anything at all, today or this week or next week or this month, because you want to buy the dip, right? BTFD, then you need to understand the rules. And the first rule would be avoid the falling knives, because they just go lower. For example, I've been talking about AMD now for 5-6 months, and I keep telling people it's too early, guys. It's a good company, it's great management, but it's too early. Don't do it. And it's obviously fallen loads since. The second thing is stop missing out. Like, stop missing out on the great opportunities that there are there every day, every week. And I'll come to what the opportunities are today in just a second. And then thirdly, and clearly most importantly right now, it is protect your portfolio, because the number one job of any investor out there is to protect your money. And I know that's kind of probably hitting home, and maybe, chest pains and blurred vision and, whatever you're experiencing right now. And that is normal if you are an emotional investor. And what I want to help you get to is become a rules-based investor, where you know what's coming, where you understand what a pattern is, because it's always the same bloody pattern. It's so predictable. And once you understand that, you look at this in a lot more of a calm way. The emotions go out of the window, and you're able to make better decisions. You're able to automate the thing. It takes you less time, and you get a better outcome. That's really the goal. So how do you learn that? There's a 15-minute masterclass I put together, like all the key rules that I use, that I've been using, that helped me get from literally corporate salary slave to being retired in my early 40s. And And now I get to do this, which is super fun, because I thought, well, what am I going to do with my life? And so, I mentioned in a video, I think on Friday, I'm very happy that my offsprings will never have to work. And some of you are writing, oh, that's terrible. I never want to meet somebody who doesn't have to work. They must be horrible people. And I kind of thought, we've all been brainwashed so much by the rich that we think we need to work for 40 years to have a fulfilled life. It's total bollocks. But I'm not saying you shouldn't do anything. I think you got to do something to get fulfillment and to get like satisfaction. And so I've chosen to teach because it's really, really fulfilling. It's the funnest and the most rewarding and satisfying thing I've ever done. So I love sharing this with you guys, and hopefully you're getting some value out of this. If you're getting some value out of this, put a V in the chat for value, and I know that this is helping you. So the link's down below, felixprehn.org/get-free. I'll put the link in the chat as well, and then I'll pin that for you so you can check that out. And who's going to go learn? Who's going to go learn? Are you going to go learn? If you're going to learn, put an L in the chat, not for loser, but for learner, because that's the best thing you could possibly be doing. So, okay, let me give you a warning. We're going to run through our favorite stocks here. Now, we got 4,100 people here live. We have 280 likes. It's a tough crowd, I'd say, but I'm loving all the Vs, guys. I'm loving all the Vs. But I'm loving even more is Pawan here with the learner and the mindful journey, who have the L for learning. Jason is learning. That's what I want for you guys. Like, literally, if you leave this stream right now and we lose 90% of the viewers, I could not be happier. Because it is more important that you learn the rules and the framework than today's news and sort of market insight from Wall Street. Because you can come back tomorrow and hear me talk about this, what's happening tomorrow, but you need to understand the rules if you actually want to get value out of this. Otherwise, you're just like, at the surface and you don't know what's underneath it, right? So I'm loving all the L's there, guys, loving all the L's. So here's a little bit of a warning. There's a little thing I talk about quite a lot. It's called the VIX. It's something that usually only options traders look at, and I'm one of those people. I trade options, I trade stocks, but I also long-term invest. It's about half-half, the trading and the investing side of my brain. And the investing side is actually mostly to keep my family calm. Because it's just, if people are happy, you're happy. So the VIX is the fear index, right? And it's being mentioned quite a lot at the moment because it's at crazy levels. And right now, we've had the biggest increase in fear since the global financial crisis, GFC, in 2008. When something gets an acronym, it was a big deal, right? And I remember that because I had a lot of friends who were getting fired from investment banks. I had friends who were working at Lehman Brothers and so on, and very little sympathy for when you say, my investment banking friends got fired. He had to sell his second Ferrari. They're all okay. They all, went to work somewhere else. One of my mentors, actually, is an ex-Bear Stearns guy. Landed on his feet, worked for a hedge fund later on. But, it was a big thing. It was a big deal, right? The global economy is kind of falling apart. So that's the warning. And if you look at where it is right now, and I'd encourage you to do that, we'll do it together. These are the futures. If you want to see the pre-market heat map, if you don't want to see it, rather, then close your eyes. 1, 2, 3. So yeah, it's pretty red. Nvidia down 5%, Tesla down another 6%, Walmart's down 4%, Amazon down 2.5%, Costco's down 2.8%, and even consumer staples like Philip Morris. People who are still smoking in 2025, they're not stopping because the economy is going to slow down, right? Or they have to pay a little bit more for the tobacco. No, those guys are so hooked, they're going to keep smoking. So why is Philip Morris down? Coca-Cola is down 4.5% pre-market. This opens up some really glorious opportunities for us. Really glorious opportunities, but it is too early for as long as the VIX is where it's VIXing right now. Fear index. Fear index is at 49. That's not a good place. You want it to be below 20. At below 20, it's kind of normal. 49, really, really, really not good. We were at 60 in April. Global financial crisis, I think we were at 80. So we can go higher, by the way. We can go higher. Now, so what am I doing? So I literally posted this for you guys in the mentoring community. There's a new little section now called Felix Notes, and I'll put in there at least once a week what I'm doing. It's a little document. You can click on that. I'm not going to run through everything here today, but I was going to do a bunch of trades, and then and I sort of showed them to you and explain them to you what they're all about, including entry points and everything. Not so you can copy them, but so you can learn by seeing me implement the process. But I also warn in that document, and I want to share that with everybody because it's, I think, really, really important. While the VIX is this high, honestly, the best thing is probably just to do nothing and sit on your hands. And it's a hard thing to sit on your hands, but we aim to be a little late. We don't aim to be early, because let me show you what early looks like. This is what early looks like. Remember AMD, right? Certain YouTuber has been making videos on that one for most of 2024, I think. No mentioning any names. So, it was trading at 190. It was trading at, 200. It's now at $83, and, it could go a lot lower. So we don't want to be early into a falling knife. And a great indicator for that right now, if you just want to look, one simple thing, you might want to write this down. VIX, VIX is the ticker. Wait for that to come back below 20, close below 20. That's kind of a breathing sign. That's kind of what we want. And LJR there says, don't buy any options. Yeah, please do not buy any options today. They are insanely expensive, and you're going to really regret it. If you don't fully understand how they're priced, don't buy any options right now. Now, David, your trade vision, you're not getting any notifications there, my friend. Okay, we will definitely get back to you, my friend. We do have a full-time amazing trader who handles all the support there. So just in the bottom right of trade vision, there's a little chat thing, that one here, and you can just say in there, hey, this is my email. I'm not getting what I should be getting, and the guys will fix that for you. Now, the other thing in trade vision we have upcoming events. We need to touch upon that, the big stuff that's happening this week. So we're getting FOMC minutes on Wednesday, last Fed meeting. We're looking for a little bit of good news, that there might be a few people in there who kind of maybe wanted to cut rates. That's kind of what we're hoping for, right? And that would then, in this new situation that we're in, make us feel a little bit more bullish. On Thursday, we're also getting inflation data out. And then Friday, we're getting more inflation data out. So some important stuff out there. I'll also be watching a little bit more than usual the dark pools this week. And again, you can get all of this literally completely for free. It's the only zero risk thing you can do today, quite honestly, is get yourself access to Trade Vision, which is the software that we built to give you guys the best data out there that I use and that you would use if you were working inside of a big hedge fund or something like that, which obviously most of you are not, and therefore you don't want to pay. You know how much a Bloomberg terminal is? Like $30,000. And it's not that good. You need other data sources. So that's what we give you. So you can see live, like literally what's happening here minutes ago, what people are trading, what they're placing. And that's very, very useful. Look, it's all bearish. It's all red, right? Kind of gives you a pretty good insight into, okay, if the big guys with millions of dollars, tens of millions of dollars per trade are all bearish, maybe I should sit on my hands for a little bit longer, right? That's basically what I'm looking at. How long is this going to last? How long's a piece of string? Look, it could be days, it could be weeks, it could be months. Like this literally how vague this is, and it's just because it's political. Now the problem becomes, and we look at some of our favorite stocks here. Like let's look at some of the big boys first. Let's look at something like an Apple, AAPL. At the moment, this is mostly momentum. We're kind of a bit fearful. Everyone's panicking a bit. And then the longer you think about it, it's like, oh, well, Apple's manufacturing is mostly in places like China and South Korea, and they're all getting hit with taxes, so their margins are going to get worse. And then you think, okay, that means their earnings are not going to be as good. That means their future profits are going to be less. Now we're really concerned. So we kind of go lower and lower and lower, and that's kind of how we chip away at it. So the longer this goes on for, the worse that gets, because at the moment, there's still an element in the market here that's hoping, hey guys, this is going to go away on Wednesday, right? Everyone's going to cave. Everyone's going to go, yeah, we'll have zero tariffs, and Trump will go, brilliant, zero tariffs, free trade. Now, if you actually have zero tariffs as the US, the trade deficit is going to get bigger. It's not what he wants. He also wants to collect 700 billion in tax from the tariffs to pay for his tax cuts. So if you really start to think this through, like, and I've changed my mind on this, like, completely. Like, I was totally wrong on this. I thought this was a negotiating tactic and it's all going to be fine and it's going to get pushed down. There'll be a little bit more tariffs, be fairly inconsequential. But what they're saying to us right now is very different. And we all got caught off guard by it, right? So that's what we're looking at, a market that's gapping down here, like, what, 3-4 days in a row now? Actually, it looks like we might not gap down today, which would be nice. But, 1, 2, 3 gaps in a row. We get a fourth gap. That's pretty horrific. It's like we haven't seen that since the 1930s. Any cell phones made in the US? Probably not. I mean, certainly not at scale. There's probably some weird little outfit somewhere, in Wyoming or something that makes free cell phones. But no, of course not. All that stuff is made mostly in China, or the elements in. I mean, they're not 100% Chinese components. Obviously, there's South Korean stuff to it and Taiwanese and everything else. But yeah, at present, all that stuff is mostly made in countries that got hit with tariffs. So iPhones should be, I don't know, 20% more expensive or something, right? Now, for Apple, that might be fine, a fairly affluent user base and so on, but you got to think this through, right? The longer this sticks, this lasts, the more concerned people will get. So I'd be careful. I'd start to look for opportunities. I'm making a list. I've shared that with some of you guys in the coaching community this morning, and let's start to build a watch list of great businesses that you really like, that you think the business is really good. Maybe it's a US business. Maybe it's something like Dollar General or something, right? It's a very US business. Tends to do very well when times are tough, right? People go to Dollar General. So there is stuff like that you could think about, and build that sort of list of. And then when the market starts to come down, the fear comes down, and the volatility, the fear goes below 20 again, and there is some resolution out there. Maybe they're saying, hey, we signed an agreement with somebody or other, on the tariff side, or, the apparatchiks in Europe are coming out and saying, oh, it's all right, we'll suck it up and we won't do anything. And it's completely unclear at the moment. Like the Irish said there won't be a tax on digital services, sort of Microsoft and Google and so on. And then other people are saying something else. So it's really not clear. It's just very unclear. The market, and I always say this, you hear me say this all the time, the market hates only one thing. It's uncertainty. We can deal with bad news. We can't deal with uncertainty because we don't know how to price it in. So it makes people go crazy. So they price in worse. So will there be a rally after this? Abso-freaking-lutely. And will it be all stocks equally? No. And here is another rule you might want to write down. Individual stocks take off faster than the index. So we can look for those early patterns. Now, is Palantir ripe to do that? Well, I'd say it's a touch early at this point. I'd say it's a touch early. So at least we're not gapping down here. But if you look at the sell-off candle there, we're lower yet again. Another, 6% down or something here, right? So how much are we down right now from where we closed? Another 7.5% pre-market. So this is not the end of it, right? Now, maybe it'll be the bottom of the market here from early January, but who knows? At this point, it isn't clear. Now, does it make a lot of sense? Is Palantir affected by tariffs? No. But they're trading at like 200 times next year's profits. So there is an element of, we got to feel really confident that the economy is great and that they're going to keep growing to put these valuations on companies. Because essentially, what's the stock market? The stock market is all about just emotions, it's expectations. There isn't really like one hard rule to measure a stock. So if a company makes a certain amount of profits, then the stock price is some sort of multiple of that, right? 20, in this case 200, could be, and that number depends largely on how confident investors are. So when confidence goes down, everything gets sold off. Creates opportunities, but it just isn't particularly fun in the moment. Here's Sofa, for example. That's another business that's just not affected by tariffs, right? They have no real foreign customers to speak of on scale. They are in some other markets, but it's pretty small. And so why is it coming down so hard? Well, it's the expectation that there could be a recession. People will not pay their loans back, and they won't be able to. Now, if you again think that through, you'd think, well, okay, so the really rubbish banks should fall a lot, and the quality banks should actually maybe be stable or maybe even go up. But in this moment of panic, people don't even go that far. They just click sell. Maybe it's just a margin call and they just click sell. So SoFi, in my opinion, should be one of the banks that is actually best positioned to weather a recession because their customer base is pretty affluent and they have a good loan book, and they've also sold a lot of their loan books so they don't have it on their balance sheet, which is pretty good. John is there. He said, go recently learning all I can. Brilliant, my friend. That's the best thing to do. Like, take this as an opportunity to learn. That's really what it's all about. And Pursuit of Alpha says, my head is spinning. Again, it's normal. If you go into your portfolio without really a framework, without real rules, then you're realizing that today. And by the way, that makes you normal. That's like 99.999% of people. Like, it used to be me. And I didn't come up with this. I'm not the smartest guy out there in any way, shape, or form. It's just I was lucky I met the right people who had been taught how this works. And they taught me. And I've been doing that now for, I don't know, 13 years or something. And it got me to freedom. Now, what motivated me to learn? Massive, horrible pain, like literally. So, it doesn't feel good in the moment, but if you take this as an incentive to sit down and learn, you're going to come out of this a winner. Right. So I'm giving you some free learning here. If you come and here, go to felixprehn.org/get free. And I can tell you that Winston would want you to learn because it means, where is he? Hang on. We've just got the pause. There he is. We only have the pause. Because it means you can go for walks in the middle of the week with your hound, which is fantastic, and he's a fan of that. So seriously, go to felixprehn.org/get free, and all you guys who are going to learn and elevate yourself, elevate your skills, right? If you're going to do that, just put a 1 in the chat, and just by doing that, you commit yourself means you're actually going to do it. Like, leave this video right now, go to felixprehn.org/get free and actually learn. And then secondly, you're going to also encourage others to take that step, because that's really the best thing that we can do. And I know you guys are a smart group. I know you understand that there is a gap here between where you are and where you want to be. And I can tell you from my experience, which wasn't pretty, that gap is a skill gap. And the beautiful thing is that skills can be learned. Like, you can just pick them up. You can learn anything, right? And the best way you do that is just by sitting down when you feel that, okay, it's painful not having the skill, and therefore I'm gonna go and learn it. So, okay, let's have a look at Archer here. Down pretty ugly, but not at the low end of the pre-market here. Market's actually open now for 3 minutes. So moved up a little bit, basically at the end of the low of yesterday. So it's not entirely horrible. Let's have a look at some of the big boys out there, like NVIDIA. Would Winston buy VIX or UVIX? SVIX. Do you understand the instrument? That's really what I'd ask you, Devin, is do you understand what's underneath that? It's a pretty complex thing. VIX there's a bunch of futures contracts underneath that. And you want to really understand what drives that, because this can go to 100, right? So would you be margin called if it went to 100? You got to ask yourself that. And would you be able to deal with that? Do you know how to maybe limit that risk? Like, that is probably one of the most complicated things that you could trade. And I talk about it sometimes because it's a really, really cool thing, but it's like options trading level like 5. Yeah? So something to aspire to, and it's amazing, and you could totally learn it. Like, I'm not saying, literally, no one's like not smart enough to learn that. It's not about that, but it's just like there are some layers to that knowledge. You can't go, say you're a beginner driver and you jump into a Formula 1 car, right? You're probably going to die. Okay, that's what I'm saying to you. I want you to be safe. I want to protect your portfolio and not have you go on some sort of goose chase out there, right? You will make money if the VIX goes down because stocks will go up. The S&P is going to go up. That's a much, much safer place to be for most people. Righty hope. So here's NVIDIA down again, 6.46%. Ouch. Okay, that's definitely not good. That's definitely not good. That's like, remember, that's one of the biggest stocks out there. We are back in May 2024 levels. Actually, we're even in March 2024 levels. That's definitely not good. So Amazon was down pretty harshly pre-market. And yeah, we're trading below the support. At a hammer candle here on Friday. And that was actually one thing I was watching out for as well, to see a little bit like, where is this going to be over? Are we getting any good hammer candles? I'm not seeing them so far. Let me have a look at the S&P. Nope, we're trading again down, 3.76% down on the SPY here. So another gap down? Say so, right? So 1, 2, 3 gaps down in a row, definitely not good. Volume looks huge already this morning. So it's not a pretty day. It's not a pretty day. And I know it doesn't feel good. I know it feels very, very uncomfortable. And you're asking yourself, should I buy? Should I sell? Obviously, I don't know what you own. I don't know what your stocks are and so on. Generally speaking, selling isn't a terrible thing to do, because it means if it goes lower, you've got cash and you can buy it on the way up. Now, it does mean, though, you need to know when to buy again. And if you don't know that, then maybe that isn't the smartest move to do. Maybe if you're sitting in an index, like index is always going to go up in the long run. You just need patience, right? That's really what it's all about. Now, if you're on some sort of crazy margined, leveraged, whatever, then I definitely think about getting rid of that, because just think through, what if this goes 25, 30% further south? Would that blow up your account, right? That's the thing you got to prevent. You have to prevent the worst case scenario. That is your number one job as an investor. Protect your money so you still got some tomorrow, so you can make some better investment decisions tomorrow. And yeah, that's kind of the way I would look at that. So what about gold? Gold actually dipped a little bit too on Friday, didn't it? Yeah, gold's coming down too, which is kind of interesting. So the flight to safety is just into even more safety, probably just cash at this point. Well, it was a pretty overstretched rally. I think, gold went up a great deal. So obviously at some point people start to take profits. We hit that resistance line up there at just almost 290. We almost touched that. And a lot of people look at that. And if you want to get those resistance lines completely for free for a week, there's a free trial. Get the same data that I look at. It's in Trade Vision. And that's how we make a lot of smarter decisions. So yeah, it's not, I'd wait for a bit more of a pullback on gold, to be honest with you. I like gold, but I'd wait for a little bit more of a pullback. Felix was bullish Tesla and Palantir the highs. That's when I shorted. Thanks for the signal. I'm glad it's working out for you, my friend. I think you're slightly misrepresenting that. I think I've been saying to people for a while that, where those exit signals are. You see these blue lines and how long they've been in here for, right? Those were exit signals. You see where it says bearish up there at 421, right? That's been there since that day. So, I think you're probably saying this with a sense of humor. And I've been saying the same thing with Palantir, that when we had that red candle there, right, that was the sell signal, right? And so again, it says here inside Trade Vision, this is automated, $106, that was the sell. Could have exited a little sooner, I think, certainly at 112. So people always say, oh, in hindsight, you're right. No, that was actually live. So, go back in the videos and check it out. Do you see a real estate crash? I think interest rates are going to go lower. Well, the market now expects to go at least 5 cuts lower. So I don't really see it. Rate cuts are generally very good for the market. There is mostly a housing shortage in the US. Obviously, certain areas are, Florida and Miami and so on. And there's some areas that are a bit different, but I don't really see that. Like 2008 was very different. because loads of people had houses that they couldn't afford. They had like 100% mortgages on them. There's no way they could ever pay them. It's very different. It was large-scale fraud. This isn't that, right? This is some sort of trade reset, and we don't know what scale it's going to be. That's what's creating the uncertainty. That's what's creating the fear. That's what's creating the downward pressure. And then big terror is going to kick in on Wednesday here, which is what's going to, everyone's like, can you please make an announcement? Can you please say there'll be some delay on this? And there just isn't. So S&P on brink of bear market, says Doomberg. Markets wipe out 9.5 trillion. Diamond, yeah, Wall Street's kicking off. They don't like it because it's hitting their wallets. So Tesla shares plunge below never this cheap level. Yeah, so look, there's a lot of stuff out there. Stagflation is now the best case scenario. You got to take that. This is an opinion from Doomberg, a publication that absolutely loathes the present president. So you got to take all that stuff with a pinch of salt, right? It's not the end of the world. Don't bet against American enterprise. American companies are pretty much the greatest in the world. The greatest inventors and entrepreneurs sit there. Some of the smartest, numbers and investment people are there, pretty much all there. And if it goes really, really south, the Fed will step in and cut rates and start printing money again. But we don't know when that's going to be. All right. So we don't know when that's going to be. So in the meantime, you want to make sure that you can sleep well. And if you can't sleep well, you should look at what you're holding in your portfolio and do something about it. Right? There's no shame in selling. This whole thing, you don't realize losses losses aren't real until you sell. This is all bollocks. This is just like in the stories, the tales people tell themselves. No, red numbers are real. Okay, if you own an index and you have a 5-10 year horizon or whatever, you're going to make money. But there might be certain stocks that might not be ideal to be in right now, right? I'm not loving Apple right now, for example, right? Because they're very exposed to this. Now, will they fix it in the long run? Probably. It's a great business, but they might have a couple of tough years. So there's this kind of things to think through. And most sectors right now are bleeding. But are there opportunities? Yeah, I think the consumer staples are going to make us a lot of money, but it's a bit early. Like Philip Morris is down, right? Explain that to me. People stop being addicted to this shit. It doesn't make any sense, but you've had two pretty tough days here. So that's a sign that people are panicking and people are selling everything regardless and not looking at what's good, what's bad. But that will create the opportunity for us. But the opportunity doesn't appear to be today. So we need to be a little bit more patient on this one. Improvement says, Felix, are you scared? What keeps you calm? System, rules, automated exits on positions. That's really it. So you set something up and you set a stop with it at the same time. That's really what makes the difference, because it means you don't have to take that decision anymore. You've made the decision when you invested in that stock at the start. And that way you're just like, okay, that was a call. I did it for good reasons. If it works out, brilliant. I make a lot of money. If it doesn't, I lose a little bit of money. Yeah, that's okay. That's the way the market works. Jason, you're going through the campaign as you did with my back. Yeah, if you got back pain, it's stress, Jason. I'm sorry to say, that's really what it is. It's I know we tell ourselves. I used to tell myself it was a sports injury, and no, it's just stress. So there's an amazing exercise. Lie on your front, like on the floor, on your stomach. Just lie down on your head on the floor, forward on the floor, and then come into a bit of do that for a minute or two, and then lie in a swings pose. And it just pushes all those things in your back that are in the wrong place back into the right place. Do that about 6 times a day. Seriously, it's one of the safest things you can do. It'll make you feel a little bit better. But in the meantime, figure out what's causing the stress and deal with it. That's what it is. Sometimes you got to make tough calls. But once you've done them, you'll feel better. So Warren was right again. He usually is, isn't he? Should I remortgage to raise more cash? No. Debt is not the answer, my friend. What do you think about small caps? Yeah, they're getting hit pretty hard. The whole small cap rally never materialized, right? I think I traded small caps about 4 times last year, lost money every single time. And I decided this is not a thing for me. Why? Well, I guess they're getting hit. The concern is just that if your consumer spends less, 70% of the US economy is consumer spending. Small caps, smaller companies will be impacted more. They haven't got the financial buffers. They haven't got the strength, the balance sheet like an Apple or something like that to necessarily weather the storms. I think that's really the concern here. So looking pretty bad right now. So yeah, definitely below any 200-day moving averages up here, 218. So this is just in sort of free fall territory. Maybe it'll stabilize somewhere in that 160 here, sort of 160 to 170, but I wouldn't be holding my breath on that one, unfortunately. Stephanie says, look at the sale. See, that's the female approach. You see, it's on sale. Let's go shopping. And you have the right approach. There is only one shop in the world where people are upset when everything is on sale, and that's the stock market. But right now it's just a little early because fear is at 54. We want it to be below 20. This is very, very, very unusual. And it's a sign that there is panic and blood on the streets, and it could therefore go significantly lower. David has got a lot of cash sitting around. You're taking a chill day. You're in a great position. I appreciate not everybody is. And exactly, go for a walk. That's the best thing you could probably do today. Ryan says Tesla is not toast. I agree with you. I think Tesla's going to bounce back, but it's going to, the more it goes down, the longer it takes, right? So yeah, it's at 217, which is pretty harsh, right? That was the absolute low of 11th of March. Wasn't that when Trump bought a Tesla? I think it was. So yeah, not pretty. And again, look at that. We went back up to that. See that brown line here? That one, that's the 200-day moving average line. We retested that here 3 times and then went again against it lower, double negative bounce off. It's really not pretty. It's not pretty at this point. Today looks pretty ugly as well. Tesla is the modern day Enron. That's just bollocks, isn't it? Because Enron was massive accounting fraud. Tesla is not that at all. It's a very profitable business with lots of cash and some really amazing products. And so, no, I think that's just bollocks. But maybe it just reflects your political anger, which is fine. You're obviously very welcome to vent that. That is your right. Using the rules when you should be looking to invest harder into the S&P 500. VIX below 20. That would be the first place I'd start, and then I'd have a look at the chart. And see, are we meaningfully bottoming out here? And at the moment, we're just not there yet. Obviously, I'll tell you when I feel that we're there, but right now we're not. This is a pretty hideous candle. We got 1, 2, 3 gaps down here in a row, so this is really not pretty. And we don't buy there. We want to wait for this to recover somewhat and give us a little bit of reasons to be optimistic, right? Has Tesla damaged their image? Yes, absolutely. I totally am with you on that. Half the people, and especially a lot of the people who were previously wanting to buy EVs for save the planet reasons sort of type thing, they're not liking it so much right now, and I totally get that. Will that change? Time will tell. What platform do you use to buy stocks? I use a few different ones, but I use mostly Think or Swim, which is Schwab. Rosa, you're going to call with us later. Brilliant. Enjoy it. Ask us all the difficult questions. Yeah, a lot of people saying this Tesla, I won't be buying another one. People really think Elon's doing something terrible there, which is interesting. But it's your right to believe whatever you want to believe. I get that. Everybody has, it's. Most political conversations don't really end anywhere. I don't see what Elon's doing as that particularly political. I'm just seeing it as doing what he did at Twitter. Remember Twitter? Fired 90% of staff. It's way better now than it was before. But not everybody shares that sentiment. I get that. That's okay. Improvement, you want to make 100K starting with 3K money. So you want to like 33x your money. I'd take it a little slower. And at the beginning, I'd focus on putting more money into that investment every month. And anyway, this is a brilliant opportunity to do so because everything is on sale. And this is honestly one of those great opportunities. It just isn't today. Might be tomorrow, it might be in a week, it might be in a month. To just get in on the ground floor. Like literally this is what makes people wealthy is the opportunity to buy in a real dip. But we're still dipping. So I wouldn't quite do it yet. But yeah, it's going to be brilliant. You're going to be able to buy, like, imagine being able to buy your house at 40% less or the house you want or something, right? That'd be an opportunity, wouldn't it? So it's the same sort of thing, except this one will make you money for a life. So if you zoom out and you get past the immediate pain, and obviously people who are retired or about to retire and don't have an income stream, you're in a bit of a different situation there, and we need to focus more on risk management. But for everybody else who has an income stream, it's just tremendous, like literally the best thing ever. And I know it doesn't feel like it, but once you understand the patterns, it's always the same bleeding pattern. Then you look at this and go, thankfully, finally, I've got my opportunity to build some real wealth really quickly and really have an amazing life. That's ultimately what this is going to be once it's over. So zoom out. Don't listen to the news incessantly. It isn't going to help you. If you want to come and learn, literally go to felixprehn.org/get-free, learn when we buy. Like, when do we buy? When do we buy this? I answer that there for you, not on one stock, but just the general rule that all the most successful investors out there agree on. All the guys I've learned from on Wall Street and Chicago and all these guys. And it's completely free. It'll take you 15 minutes. It'll give you a lot more value than the last 50 minutes here. To you 4,500 people who are here live with me, I appreciate you. I appreciate that you feel uncomfortable right now. That's normal. That's very, very normal. What I'd say to you is use that discomfort, not just to scroll and read the news headlines and get more uncomfortable and more stressed, but say like, this is it. This is the last crash that's going to make me uncomfortable. The next one, I'm going to be smiling as much as Felix. And you'll be as relaxed as Winston here, who's pretty relaxed, showing us only his paws. Winston, hey, there he is. And it'll be the thing that'll be the great big shift in your financial journey and your financial independence, and it's going to get you to a wonderful place. And anybody can do it. It isn't difficult. It just takes the desire, the want. That's really all it is. And for most of us, me included, it needed pain. So here we got some pain. So use it, my friend, because if you ignore the pain, from my experience, it comes back and it's stronger. So we don't want that for you. So check that out. Go to the link down below. I pinned it to the live chat. I'll put it in there one more time for you as well. And there it is, felixprehn.org/get-free, because I want you to get free. And I thank you for tuning in. And I'm excited to see how the week plays out. I'll be back live tomorrow, same time, same place. All the best.